Hey, it's Jack from Alpha Charts with a long view video. Today is 12/30 or December 30th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned near your time frame and risk tolerance. All right. If you don't follow me already on Twitter or X, you can follow me at Alpha Charts 365. I post stuff all the time on Twitter, my thoughts and things about the market mostly. Also, if you really like my stuff, click subscribe. On the it costs $10 a month. You get all of this information. I just gave a free view of what it's like this past week. I gave it out to everybody. If you are interested in seeing how it all looks, just click on Alpha Charts 365, scroll through my profile. It'll show you exactly what I give to subscribers. Again, it was a free view, no charge. Just look at it starting the new year, though. Obviously, all those tweets that start with subscriber will only be for subscribers. Okay. So again, if you like it, it's $10 a month. It's affordable to everybody. I price it so that anybody that wants this kind of information can be able to get it. And if you think it will improve your trading, click subscribe. It's a no-brainer at $10 a month, right? All right, let's get into this video. I'm using Deep View. Go to deepview.com if you're interested in the charting software. Also, it's an amazing scanning software. That's my main scanner I use. We're going to go through monthly charts because this is the long view. And we will just have a 50-month moving average, price, volume, and I'm going to keep the MACD open on the bottom. I think it on a monthly, it gives us a big view of trend and trend change. And you see, start with bonds. The bond market looks like it wants higher at this point, right? Especially if it gets above 75. Being long bonds may make sense. It has the last couple of months. It's done very, very well. And and we'll see. Again, you see the MACD is crossing over. I'm not going to spend a ton of time on any one particular chart, but we will talk about them all. Also, we're going to go through the mega caps to see what they look like. All right, and here is Dow Jones. Looks like it is breaking out from a cup and handle like base. Extremely bullish look. MACD cross, very bullish there as well. Nothing bearish about this chart closing at all-time highs. This is okay. This is small caps. And I'm going to get rid of this stuff because this is old information. And right, we talked about it being a late stage base up here and so forth. And we saw the cross here. And, again, it's been months and months and years of really nothingness since then. And what do we have here? But you can see we're starting to cross back into positive territory. The cross is just happening. So that's kind of interesting. And we had the breakout of this area. There's your 50-day, 50-month, sorry, moving higher. Everything looks good on this chart for the breakout. It went up 12% almost this past month. So nothing goes straight up. Again, 9% the month before. You're talking about a 20% move in 2 months. It's a pretty big move. So maybe we get, a little retest, in the beginning of the month, but overall, it's trying to break out of this area. As long as it holds, this general area, 198, 200, something like that. Yeah, IWM looks very bullish, right? Here's the mid caps. Looks very similar enough to IWM, and there is the cross happening right there. Again, it's a very bullish cross on the monthly chart. Again, not every cross is perfect, right? We tried to cross over here, and it got rejected, and now we're trying it again, right? So nothing is foolproof, nothing is 100%, but I can tell you that MACD monthly crosses are pretty good. Here's the Qs. The Qs crossed way back here, and again, they've been in a nice uptrend trying to break out of this general area. Let's just get rid of some of this stuff so you can see the candle better. You see, we're just trying to break out of this general area, and it closed at all-time highs. And even though there was a 3-month pullback, right, it never crossed lower, so the trend is still well intact, which it is. And looking at the SPY, same idea. It crossed back here. It did have that 3-month pullback, August, September, October, but it never truly crossed. We were very, cautious here. And then November happened, 9%, and then another 4% December. Those are strong months, right? Very, very strong months. And so never crossed, and then it came right back, right? Bounced. Let's go into each sector. XLB looks like materials wants to cross. It did back here as well. It's back to the scene of the crime, and any push higher will be bullish. XLC crossed way back in here, back in May, and really has been very bullish since. You see how the 50-month held nicely there. XLE. Now that's a bearish move, right? And it's starting to widen a little bit here. So unless we get a pretty good snapback, that's not looking so hot in XLE. Where financials are the exact opposite. Look at the cross that happened last month or beginning of this month, and it looks like, it wants to take off at this point. Financials look really good, up 15% over the last 2 months. Looks nice there. Industrials, I'm sorry. Industrials, you see, it kind of crossed a couple times. Had a whoopsie breakout, came right back in, and then we found buyers here and had two very nice strong months, and the MACD is back into a bullish look to it. XLK still looks bullish, broke out of a beautiful cup and handle look, 12% there, another 4 there. That's 16, 17% in 2 months. Looks really, really nice. Interesting that the small caps had about 20% in the last 2 months, and XLK was only 17%, but that's just, a little more strength maybe in small caps, but we'll see if this continues. But technology stocks look really good. I mean, beautiful base, very clean. That's why we do monthly charts. Looks great. Staples looks terrible. I mean, it did hold here, and maybe it moves higher, maybe it participates, but as of right now, there's no reason to be involved in Staples. Real estate starting to get that crossy look to it, right? We'll see if it can finish it, but if it can cross and start to move higher, real estate could start to look interesting again. Utilities, not so much. Healthcare, not so much yet. Maybe another month or two. It may need to just finish consolidation and go from there. And then we have XLY, which crossed back here. Again, it kind of went nowhere for a few months, and now it's starting to separate and move higher and is above this area right there, 52-week highs. Looks really, really good and looks like it wants higher. So XLY looks pretty good. So a lot of these sectors are looking very strong, and not only are looking strong, are turning strong, like XLB, right? It's close. If it can push up this next month, in January, this would be extremely bullish. Industrials, right? If it can, now if it falls here, that's the exact opposite. But overall, what I'm seeing on the index and sector level is bullish on stocks and bullish on bonds, right? Which means potentially falling interest rates, right? And again, I think that'd be probably good for the markets in general, especially the small caps. All right, let's go over the mega caps because they're going to give us a lot of information as well. Here's Apple. It's really gone nowhere since it's gone nowhere since June of 2023, just sideways. Could be just considered consolidation. And they're real close. Okay, nothing negative about that. It doesn't really excite me all that much. Here's Amazon breaking out. Again, this was some subscriber notes I had when we were in Amazon. It bored me out if you look at the daily chart. So I closed the trade probably a little bit too early, but it is what it is. Point of this video though is this monthly charts, and it has a beautiful cup and handle and it's just moving higher. We can easily manage risk against this 145 area, but Amazon looks great. Avongo, it's a big semiconductor name. Broadcom looks fantastic after this nice tight consolidation. Again, MACD looks fantastic. Um, Berkshire Hathaway, eh, you know, try to break out, really couldn't. Don't really love that. Google, trending fine, not doing anything, bad. We got the nice MACD on there. Johnson Johnson looks terrible. JP Morgan starting to get more separation here with the nice big breakout. Again, banking stock was a little bit of a theme there. Eli Lilly still looks very, very strong. We'll see if that continues, but it looks fine. Let's take a look here. This is MasterCard. Again, trending higher. Looks good. All-time highs. Nothing bad about that chart. Uh, Meta, same thing. I mean, right there near all-time highs. You see the MACD cross was back in here. So even though, obviously it's never going to catch the bottom, but you get a good piece of that trade if you just, trade by the monthly MACD, right? Here is Microsoft, again, a name that we were in back in, November-ish. Took our profits near the highs. We got lucky there. But it's not doing anything wrong. And maybe taking profits was the wrong move, right? Because it looks like it wants higher. My time frame is days to weeks. So I use monthly charts like this just for general guidance, but I don't trade off of them in general. And but overall, this looks very healthy. It looks really good. Nvidia couldn't crack 500, but just a nice tight consolidation, and everything looks fine there. Tesla. So Tesla is trying to break out and it's having a really hard time. It has a little kind of like flaggy look right there. And try to push out, couldn't. Now here's your 50-month right below at 206. So I think that 206 level and maybe even down to 200, something like that, right? 200 has to hold on Tesla. If it pulls back, not so good. If we could break this trend line higher, you'll confirm this cross, and I think Tesla could have a very, very nice move higher. Looking at Taiwan Semi, it's trying to cross higher right here. It's the best it's been in years, right? Hasn't been this high since, March of 22. So it's trying to make the move. Again, not maybe something I want to own, but good for the group. And so that's why we're doing this. United Healthcare, really in a downtrend, just consolidation. This would have to have a really good month or two for this to change on the MACD. Looking at Visa, all-time highs, looks really good as long as it stays above, 250-ish, 255, somewhere around there. All looks good there. Walmart. So Walmart broke out and then fell right back down. That's a little worrisome in general. And we do have maybe a negative MACD cross if we can, or bearish MACD cross if this continues lower. It's definitely one I want to avoid. Then you have ExxonMobil. Again, we said oil and gas names are not looking good when we go to XLE. And ExxonMobil is no different. It is at the bottom of a range, but we do have a bearish MACD cross. And so I would not be interested in this name for my trading style. And so there you go. There are all the mega caps as well as every sector and every sector and every major index. You see they look very constructive overall. No, in my opinion, no reason to be overly bearish in any way, shape, or form. If anything else, you should be bullish and looking for ways to enter positions as opposed to looking for ways to short positions. All right. Hope you all are doing well, and Happy New Year to everybody. If you haven't yet, check out Alpha Charts 365, scroll through everything, see if the subscriber group is right for you. If it is, except for $10 a month, you're not going to find a better deal out there for the amount of information that I give. All right. Again, good luck today and this week and next year, and hope you all have a great day. Bye-bye.